Weekly wrap-up, 27 July to 31 July 2026. Wall Street and Dalal Street shrug off oil shock. Sensex jumps 2.68% for the week. Welcome to this weekly market explainer. We are looking back at a week that opened with a real shock but ended up finding its footing. We'll walk through exactly how global markets absorbed geopolitical tension, navigated a tech sell-off, and still managed to push higher by Friday.
Let's look at how the major indices actually closed out the week. Despite some heavy early volatility, we saw solid gains across both Dalal Street and Wall Street. Starting in India, the Sensex closed at 78,094.64, which is a gain of 2.68%. The Nifty 50 finished at 24,383.60, up 2.59%. Moving over to the U.S., the S&P 500 gained 1.0%, the Nasdaq Composite rose 1.2%, and the Dow Jones added 0.9%. It is pretty remarkable resilience when you think about it. Despite a massive drop midweek, buyers steadily returned by Friday. Section 1. The domino effect, a chain reaction driving the week's volatility. To understand these weekly gains, we really need to break down the underlying cause and effect. It played out as a four-part chain reaction. Step 1, the week opened with renewed Iran-US fighting, and this geopolitical flare-up immediately sent Brent crude jumping 7.3%. Step 2, rising treasury yields from that oil shock fed right into doubts about artificial intelligence capital spending, hitting tech stocks. On Tuesday, July 29th, the Dow shed 1,153 points. But then came Step 3, bringing some stabilization. The U.S. Federal Reserve held rates steady at 3.50% to 3.75%, though three officials did dissent. Finally, Step 4. By the end of the week, that initial oil spike eased, and foreign institutional investor buying returned strongly, which pushed the Sensex up to close 2.68% higher. Section 2. Rates and your EMIs, central bank decisions, and real-world impacts. Beyond the stock indices, the week's most important updates came from the central banks. Let's contrast the current situation in the U.S. and India. Under the U.S. reality, the Federal Reserve held the federal funds rate at 3.50% to 3.75% for a fifth consecutive meeting on July 29th. But there is some internal friction there. The FOMC voted 9-3, with Beth Hammack, Neil Kashkari, and Lori Logan dissenting because they favored a rate hike. Now looking at the India reality, the Reserve Bank of India has held the repo rate steady at 5.25% since February 2026. Their next MPC meets from August 4th to 6th. So, what does this mean for your wallet? The verdict is that your home loan EMI stays flat this month. There's no rate relief from either central bank just yet. Both the Fed and the RBI are keeping borrowing costs exactly where they are for the time being. Section 3. Business and Tech. Spotlight on key corporate movers. The broader market movements were heavily driven by a few specific corporate reports. First up, Bajaj Finance reported a stellar quarter. Their Q1 net profit jumped 27% to 5,986 crore rupees, which helped fuel the broader rally in Indian markets. Over in the US, Amazon shares surged on strong Q2 earnings, but it was not entirely positive across the board. On July 29th, Nvidia fell and KLA Corp dropped, even though they beat profit forecasts. This pullback happened because investors are growing a bit skeptical that the massive capital spending on artificial intelligence will actually pay off in the near term. Section 4. Commodities and what's next. Tracking assets in the week ahead. To round out the analysis, we are also tracking major alternative assets. After that initial spike early in the week, crude ICE Brent actually closed the week down 9.3% at $88.09 per barrel. That easing provided some much-needed relief to the markets. The USD/INR closed at 95.35, meaning the rupee grew stronger by 1.24%. Meanwhile, gold dropped 1.1% to $4,045.16, and Bitcoin fell 2.0% to close at $62,929.27. Looking forward, here are the key dates on the economic radar. From August 4th through the 6th, the Reserve Bank of India's Monetary Policy Committee meets to make their next repo rate call. Right after that, on August 7th, we get the U.S. July jobs report. That will be a critical piece of data shaping the Federal Reserve's next move. Which brings us to the bottom line. Markets shrugged off a midweek 1,153-point Dow shock to close higher, with the Sensex up 2.68%. But Iran-driven oil volatility remains the key swing factor into August. Keep an eye on those geopolitical headlines, because any fresh flare-up could quickly respike oil and reverse the gains we just saw in the rupee. That wraps up our structured look at the week's market movements. Please make sure to follow @KatharinDileep on Instagram and subscribe on YouTube @KatharinDileep.
As we head into a new month with central banks in a holding pattern and geopolitical tensions simmering, a major question remains. Will the tech sector find its footing, or will a new oil shock upend this fragile market resilience? Thank you for tuning in to this explainer.